The Governor of the Bank of England, Mark Carney, has made an important intervention in the Brexit debate. Here with me is Chris Giles, economics editor of the Financial Times. Chris, Governor Carney is walking a bit of a tightrope here. Where did he come down?
Well, the politics of this is very difficult for the Bank of England. Its views are going to be co-opted by both the in and the outside. And he came down, I think, in two ways. One, looking at the past, very much on the EU has been good for Britain. There is almost no way you can argue that that's not what he said.
Good for Britain in terms of?
In terms of prosperity and helping the British economy be more open and more dynamic. In the present, that's the past, the present, they're saying a little bit more of a nuanced view where it says that this openness does leave Britain a little bit more vulnerable to shocks from Europe. So,
which we've just had with the global financial crisis and indeed the Eurozone sovereign debt crisis.
And so the present is a little bit more nuanced, though we're richer, better off because of Europe, but a little bit more vulnerable. And then the future, they're saying as the Eurozone becomes more integrated, which the Bank of England supports, and says that's necessary for the Eurozone, that will raise questions for the UK's relationship with Europe. The UK doesn't want to be outvoted, particularly in financial regulation. And so he's very much supporting David Cameron's desire to have more safeguards for countries that are outside the Eurozone, inside the EU, but with their own.
Now we'll come to those safeguards in a minute, Chris, but the big change in British foreign policy occurred about 4 years ago, when David Cameron said specifically that he wanted the Eurozone to integrate more tightly. And in effect, he didn't mind if Britain was left outside in the outer rings, leader of the out, so to speak. And what are the risks of a more tightly integrated Eurozone for Britain? Is it that we don't have any say on the legislation because we're not single currency members, or what?
No, the issue really is that many of European financial regulations which apply to Britain are set essentially by Brussels. Now, the Bank of England is saying that's fine as far as it goes. The EU has actually world-class financial regulations. They meet all the G20 requirements and more than that. There are a few things that Britain is in dispute about, bonuses and things like that.
Where we got outvoted a couple of years ago.
Outvoted. So there's a few, but those are sort of issues on the margins of the broader regulatory picture. Where the concern is that if you move to a very, very integrated banking union in the EU, then you actually have to have more directive control from Brussels. And what the Bank of England is saying is that actually Britain still needs flexibility because we have a very large financial sector. You could just see it across.
Well, this is what it's about, isn't it? It's about the City of London as one of the leading financial centres in the world.
And the Bank of England wants to have an ability to often go further than European regulation because we're much more exposed in this country. So
higher capital ratios for banks.
Higher capital ratios. We'll have the freedom to do that, not necessarily definitively do that, but not have to agree with every single European directive there is. That's not to say you wouldn't have Europe-wide, EU-wide rules, but it doesn't want to be outvoted by a caucus of Eurozone countries because there are 19 Eurozone countries, and then it wants to have safeguards for the outs that they can, in certain circumstances, set their own financial regulations.
Now, Chris, you hear that this really is at the top of the government's agenda, the safeguards for the City of London, rather than, say, cracking down on welfare benefits for immigrants from Central and Eastern Europe. Is that correct?
Yes, I think as far as the Treasury is concerned in particular, the immigration and welfare benefits are very important for the public perception of the referendum debate. But what the Treasury are really concerned about is the relationship between the euro ins and the euro outs, and making sure that the euro outs as a group have an ability in the future not just to be railroaded or to be told that actual activity in the financial sector has to occur within the Eurozone. So that we in Britain can still export financial services, for example, without any controls or exemptions from the single market into the Eurozone, and the activity doesn't have to take place within the zone and be regulated by authorities in Frankfurt, for example.
So this will probably be the governor's first and last word in terms of the Brexit debate.
I think so. The governor and the Bank of England are extremely knowledgeable about the area, but they're also extremely careful, and they don't want to be drawn into what will be a fierce referendum campaign.
But Chris, it won't be your last word on the Brexit debate, nor I
Absolutely
suspect mine. Thank you very much.